Mike, one of the founders of Live Swell Beach Bungalows, also author of Vacation Rental Confidential. And today we're going to be talking about wealth building with vacation rentals. Now there's a lot of different ideas out there. Some people think that vacation rentals aren't profitable. Some people believe that you can make money with vacation rentals. I'm here to tell you that I've made a lot of money with vacation rentals, hundreds and hundreds of thousands, made hundreds and hundreds of thousands, and have owned millions of dollars of real estate. And that's not to impress you. What that is to do is to impress upon you that it is possible. Now you might be asking yourself, well, what's the difference? Well, the difference is going to be the person. The difference is going to be how well do they buy, how well do they keep their cost basis, how well do they manage, renovations, improvements, things like that. That is not the point here. The point here is to show you how we can build wealth with rental properties, income producing properties, whether it's a vacation rental, a traditional rental, a commercial building. And so what I'm going to do is I'm going to explain this graphic that I created, and it's in the book Vacation Rental Confidential, and it's also in the post that accompanies this video, Building Wealth with Vacation Rentals. And I'm going to go ahead and recreate this, explain it as I do it, so that hopefully you can feel more confident when you go out there, you're looking at vacation rentals, saying to yourself, okay, am I making a wise investment decision? So, Professor Mike, here he goes. So we have time on this bottom axis, And so this is going to be year 0 down here, and this is going to be year 30. Why am I using year 0 to year 30? So I can really illustrate the example. Another important point to understand here is that we do use leverage, we use debt, we use mortgages to help us finance properties. Real estate's a very capital intensive business, but if we know how to use debt wisely, it is an accelerator of wealth. You can watch a video that I have on how to short the dollar, and we'll come up with some more content to show you why debt is so important. But anyway, that's not the point here. And so on the y-axis, we're going to have value, right, essentially in dollars. So as I go through this, I'm going to choose a purchase price, and it doesn't matter what the purchase price is. At the end of the day, we're going to use an example relative to where we are. So it could be $1 million property, it could be a $500,000 property, it could be a $50,000 property, it could be a $100,000 property. The day we buy the property, right, we're going to lock that in. So we're going to have a purchase price, okay? And the purchase price, it doesn't change. It's going to stay the same, the entire time that we own this property. Now there's really 2 things that happen when we own real estate over time. So when we have a loan, we're going to be paying down debt every month. So we're going to be paying down the principal balance of the loan, and that's a really good thing. Because if we're doing this business right, it's not my money that's paying down the debt. It's the income that I'm taking in from my renters, my short-term renters, my long-term renters. So typically the debt is not 100% of the purchase price. It's usually around 80% of the purchase price or so. And it's going to end at year 30 because it's a 30-year loan. In this example, if it's a 15-year or some 20-year, it's going to be a little bit different. So what we're going to observe is our debt is going to be going down over time, right? And again, that's a good thing because, the income that we're bringing in is paying off that debt. So that's one of the things that's helping us build wealth is the tenants paying down. And the other thing that's helping us build wealth as well is properties going up in value. Typically over time, real estate goes up in value. It rarely goes down in value. It has happened, but as wise investors, if we purchase right, we purchase at a discount from fair market value, we're in it for the long term, we're creating a good amount of income, we're going to be safe. So what I'm going to do is I'm going to represent that appreciation with this green marker right here, okay? Right? Now, I'll put the cycles in too, so we can kind of see here, well, real estate, maybe it goes up and it goes down. But over time, right, we're going up, okay? So again, I'll just recap these lines. So that blue line right there is our purchase price. This red line right here, right, this is our mortgage or our loan balance going down. And then this green line right here, this is our appreciation, okay? This is our property value going up over time. That's, for example, the property that your parents bought for $80,000 that might be $500,000 or $800,000 20, 30 years from now. So we're going to start to put in a couple of the other things here. I'm going to specifically show you where the appreciation is, where the debt pay down is, and how we're building wealth. So again, this is the loan balance. And so these two lines, the green line down to the red line, that is now all the owner's equity, right? And the more equity you have, the more wealth we build. Now, we can have a lot of equity in one vacation rental, but if we can do this over and over and over again, we can have a multiplier effect on this, okay? So that's our equity right there. The difference between the purchase price, again, that blue line, and this green line right here, this is your appreciation. That's your appreciation, right? So this is my appreciation, okay? And now this right here is paying down my loan. So that's the difference between my purchase price and my loan balance. So this is my pay down. And so if you can see in that graphic, like I said, that accompanies the post, that you have right here, right? We're building wealth because we're buying an asset, right? It's appreciating, and we're using some debt to financing it, and that's being paid down by the monthly payments over time. So this difference in between right here is building wealth. So I hope that helps you understand, hope it helps you feel a little bit more confident in how to do this. The real keys at the end of the day is going to be, can we produce enough income to cover not only our debt, but all of our expenses, so we have cash flow, but then also, are we creating equity? Did we buy right? Did we buy in the right places? So that's another story, but this is how to build wealth. It is possible with vacation rentals. If you'd like to learn more about vacation rentals, investing in vacation rentals, check out Vacation Rental Dojo. The link is down below.